All right, good morning. It's Friday, June 20th. Zach Howard morning market update. We were off yesterday with U.S. markets closed. Had the big central bank parade. On Wednesday, we had the Bank of England, no cut. We had the Fed, no cut. A lot of gibberish out of Jerome Powell. Might be raining tomorrow, might be sunny. Take your umbrella, take your sandals. We don't really know. No credibility whatsoever. But more interesting to me is what the Swiss National Bank did, the largest hedge fund in the world that moonlights as a central bank. They cut rates. So they're already out in front of the deleveraging of their monetary system and providing liquidity. 25 basis point cut to 0% interest rates now into Switzerland. Switzerland, like I say, that Swiss National Bank, it owns a shit ton of those mega Mag 7 stocks and thus U.S. equity exposure. And further to U.S. equity exposure, today we have one of the largest open options expiration expiry days in U.S. history. Only biggest to the last one in March. $4.3 trillion notional value expiring here and gets rolled over for the quarter early in the trading session today. Implied volatility, what are we looking at? Part of my process, that VIX level down to 19, a big drop here, 13% to start the day, to end the week. After all the geopolitical headlines and clickbait throughout the week, it's going to be the start of World War III. Well, the signal is actually in the volatility, and the flows of markets driven by volatility is what moves markets, not narratives around president this or bombing that. That is not how it works. Implied volatility keeps getting lower. More and more premiums are being harvested for market dealers in through those options, not trying to take a position. Because of that, the S&P 500 is kind of pinned at this like 5950 gamma level. And regardless of what happens with headlines overseas, the market isn't really going to move much until probably after this week. Last time we had this big options expiration set up the backdrop for a significant flush in April. Will we get that again in July? Possibly. But for now, we see bullish momentum across the risk assets. Bitcoin, 106, it's bounced off its lows here, consolidating in this 103, 108 range for the day. Bullish trend. Mara looks pretty attractive in the notebook from a upside to downside risk probability. To me, looking at the commodity space, those moves earlier this week in oil, now new bullish trend alongside natural gas and copper, doesn't really say that we're having disinflation or a risk-off macro regime here anytime soon. Now, that could change next week, but commodities looking at a similar set of what the dollar does, keeps falling. The volatility in the U.S. equity markets keeps falling. Dispersion in market is kind of elevated here. I think we go higher still before we get a pullback, and I think it's a boring kind of end of the June. That's what I got for you. I hope you have a great weekend, and I'll see you soon.